morning, everybody. It's Wednesday, March 20th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments or would like to chime in on anything we're talking about, please drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here had May corn down a penny at 438.5. May soybeans were up 6 3/4 at 11.92 1/4, and May Chicago wheat was down 7.5 at 5.45. This morning, the USDA was out with a sales announcement of 120,000 soybeans to unknown destination for 2024. I'll kick it off here this morning. Just a couple of tidbits of information. We've got a lot going on, certainly just in, geopolitics and things of that nature. But one thing I noticed, Ben, we had corn open interest up about 30,000 or so over the last couple of sessions. So kick it over to you to start the morning, get some thoughts going, and we'll move it around here.
Yeah, the corn market has had a pretty nice bounce off a fairly nice channel moving up, but it's in a consolidation mode now off of its highs. That 44.5 down to 31 3/4, 31.5. It's coiling for its next move, and there is no true indicator until it breaks out and heads in that direction. This would be from today's pricing and move back down to the high 20s or potentially into the high 40s. Charting is no science. It's just a kind of a roadmap to things that could materialize. In new crop corn, we did manage to get a close over the 50-day moving average, which is slightly constructive. See if we can hold that today. That's been from what Dustin had spoke about before. Kind of that we didn't break as hard and on our deep breaks, and that moving average is a little bit closer. Dees was able to penetrate it. May's still working on it, and it comes in at 443 now. It's moving down. You can look at this chart and you can give two different outcomes for the short term, which is a move back down to the high 20s or move up to the 40s. So it just, what is that catalyst to get that short to want to cover? And we've seen a pretty good chunk of corn covered over the last 2 weeks. And is there motivation to cover it and move closer to a neutral position as we get into the growing season? Or are they willing to stand in here with it? Highly profitable position in corn, and it may take a little bit more outside input in order to get them separated from their profitable short position. Soybeans, on the other hand, even though they didn't feel great yesterday, they had a pretty bad day where they ran in a bunch of stops on the 50-day and settled right around unchanged. Did probe the lower end of their range yesterday. Was not able to push through it. We've seen that inverse trade in corn and beans still. Yesterday was a day where beans were lower and wheat was higher. Today is the opposite. I don't have a real huge explanation for that, but it does seem to happen on a regular basis. But beans, looking at where they're at, I think that position, even though we're not doing the kind of export business that we would like in soybeans, no beans have been above their 50-day here for about six or seven sessions. And I think that short position that's really large there is probably a little bit more uncomfortable, financially speaking, than the corn position. A lot of that was put on sub $12. So I think they're being tested a little bit more here. Not being really super friendly beans, we got to be respectful of the fact that we had a great crush number that came out. So the bean chart actually looks to me a little bit more constructive than the corn chart at this point. You've got May has tested its 50-day. It's run through there. It's back up against it this morning. So that the thought process is that above the 50-day, maybe we can motivate more shorts to cover. Potentially, ideally, taking us back towards gap type areas. But I just don't know what that catalyst is today to get the short separated from their positions. But I do think that the bean position is probably slightly more uncomfortable to the short than the corn position is today.
Yeah, it's good stuff. And you're, you talk about this big short position, and it's like, we're going to be coming into arguably one of the biggest reports of the year in a couple, about a week and a half out. Um, what's your thoughts, Ben, on just position squaring ahead of that report and what that's going to look like?
The managed money crowd is pretty sophisticated. If they're convinced that they have a really good position on, they'll go buy some short-term calls or something to cover themselves in the event that we were to get some numbers that would put a lot of pain on them. They're not just going to sit and be wildly exposed if they sense that they have risk. So, I don't know that the covering has to always come via the futures market. It can come via the options market. When I look at the term velocity of how we've moved and how we've covered, they've covered, I think, close to 100,000 corn on a 35-cent rally. And on a soybean rally, we've rallied, 70 plus cents, and they've managed to get back about 15 to 20,000 of that short. I think that plays in with what the organic position of the grower is, which if we go back a few months ago into harvest, the grower was much more willing to move beans and be patient with their corn. So I think that the grower doesn't hold the same percentage of beans that they do in corn. And ultimately, with the grower being the natural seller, it could put a little bit more pain in the bean market, even though I'm not really overly friendly soybeans. I just think that there's a much leveler playing field with the managed money versus the grower and in soybeans than there is in corn. And we have rectified some of that in corn, but they've very quietly, very effectively covered a pretty good chunk of their position. They've got quite a bit left to go, but should they get in a position where they have to cover beans a little more aggressively, we could see a little more fireworks there. And I think that would create tremendous opportunity for hedging.
Yeah, just to add to that point, Ben, we were talking about this yesterday, but they've taken the inverses out of the market too. So old crop, new crop, May 24 versus Nov 24 has gone from $1 over to, only 4 cents inverse. So you've taken a lot of that out. I think the shorts probably sit, mostly in the front. That's kind of their MO, so they're probably mostly short where the farmer isn't long.
Yep.
And maybe vice versa, so there could be a spread play that happens too. There could be lots of different ways that you kind of run in some maybe out of position shorts, if there's not the farmer long to offset that short in the front end. So I think that's kind of interesting too. It could just be, where corn, they're short, obviously in the front, but the farmer's long. So, I'm kind of more bearish new crop beans, I would say, than old crop. Again, might change my mind completely by a week from now after we get the acreage numbers. But
and I think even though we closed poorly the day that we went through the 50-day and we ran beans up to 12.17, 12.18, I think that if you look at that in terms of what in the military would be referred to as a probing action, it did not find a lot of resistance, right? It didn't find a lot of sellers above that moving average, and that's created that short-term vacuum in space. And my inclination would be that might even be lighter now that we've cleaned it out once. So yeah, I think you bring up a great point that the funds are short where the grower is not real long, and that could create sort of a vacuum in prices. So I'll be interested to see how beans react here. They have the low end of their range. I do get nervous on Fed days. We've seen a couple times where we've rallied into those this year and nothing changes, and then the next day we tend to get some pretty negative price action. So I don't know. I think today's kind of a slightly today and tomorrow will be slightly telling day of how we're going to sit going into this report.
Yeah, it'll be interesting to see too tomorrow if we continue the pace for corn export sales. I mean, we've had week after week that they've been getting rock solid, beating estimates, and be interesting to see this week how that shapes up. One question I had, we've heard more and more chatter the last couple of days just on China continuing to approve more and more varieties. of GMO corn and beans. Justin, big picture, what is that? What's that saying? Is there any, telltale signs going forward of that happening, or what's your thoughts?
Yeah, I mean, well, they've been on this path for a while, right? Ever since buying Syngenta, I really think it started with the trade war back in, 16, 20 through 20 era, where they felt like they needed more food security. And, they've made massive investments in South America. They've invested in biotech companies. So I think any way that they can get their domestic supply up, and it's been, for decades, their genetics have really not changed. They've had horrible yields, right? So if they can improve those, 25, 50%, that's a huge amount of grain, especially on corn. You look at the number of acres that they have. So yeah, I think they're going to, I think they've resigned to the fact that they can never be self-sufficient on beans, and they're going to be an importer. And so, that's why the investments of billions of dollars into South American infrastructure and, debt obligations to, they've done a good job of buying, different countries quietly, through land purchases and infrastructure projects and debt deals and so on and so forth. So they always think in terms of decades, right? So they've been investing all over Africa, anywhere that they can get a good foothold on making sure that they have food security and commodity security. So this is just another direction. If they can boost those domestic yields, that's just, that's the quickest return for them, in my opinion. And if there ever was a major conflict with North America, even their South American investments are at risk to them, probably in their eyes, as far as transportation and some of those issues. So
Yeah, well, it's we touched on it briefly, but it's terrifying. We're going to hear there's a hearing today up on Capitol Hill about land purchases by the Chinese, and they were talking this morning just about some of the locations of this land, and it's quite terrifying when you break it down of what could possibly happen if we don't get control of this in some capacity. So be interesting to see what shakes out there. Rylan, real quick, we got a couple minutes here before we come into the open. Notice that they're looking for possibly placements to be up around 6.2% or so. What do you got for cattle on feed Friday estimates and cattle in general?
Right. Yeah. I mean, I think everybody wanted to see what this was going to shape up to be. I think the expectation is that, there's been a considerable in movement in feedlots just last month. So, and also that imports have been really strong lately. So I think that would reflect in the higher placement number expectations. So on feed, we're looking for about 101. So definitely up 1% from last year. Placements at 106 and marketing's at 104. So, it seems like right now there's kind of this balance that's happening right now, just because, you got cash prices at record highs, you got beef prices that are likely to see record highs later on down the road. And you've got the packer that's just kind of caught in the middle right now, just trying to save as much money as possible, I think, at this rate. But, slaughters haven't been, at least this week, they're catching back up pretty quick. We were at 242,000 week to date versus 233 last week. So we aren't seeing the big kind of setback that we saw, likely just because beef prices have been on the rise. So I think that's just a relationship that we're going to have to keep an eye on pretty closely. But as of right now, we haven't seen any cash trade right now. We're looking at offers at around 188 on the live side. So it still seems like there's a good precedent for the market to stay pretty firm even before the report. We see a lot of the times, especially with the funds leaning to the long side of the market, that you could see a little bit of risk off towards the end of the week here. But right now, it just seems like we're trading the day-to-day focus, on just how cash is shaping up, how the beef market's shaping up. I think there's just a lot of caution here with just where the price is at and where we're at in the cattle cycle, that everybody's got to stay pretty well protected. And it just seems like the market is just moving sideways, which is always not not conducive to any real new ideas. We're just kind of moving in this pattern, and it seems like we're going to break out one way or the other. We just hope it's not to the downside. So the market's giving everybody an opportunity, I think, to get really well hedged, or at least really well covered at this point, just in case we see something really ugly, or if we see these placement numbers that are 10% above last year, something that would really kind of shock the market to the downside. So just, staying protected, I think, is paramount still. But we are at a seasonal point where beef demand should start to be wrapping up. I think we got a little bit of a demand injection from the good weather that we've been seeing just all over. And now that the forecast is calling for some freezing temperatures in the U.S. South, maybe we're just going to kind of let that pass a little bit. So we'll see if we can still stay at, the temperatures can come back. We start firing up grills when we need to fire them up. I don't think that's really going to change too much. It just seems like we're just trading that equilibrium between slaughter and and cash right now.
Oh, very good. Appreciate that update. Just came into the open here. Acorns down a penny and a half now, 438. Soybean complex is strong. We're up 10 and a half here, 11.96 in the May contract. And May Chicago wheats down 9 and a quarter at 543 and a quarter there. We will have export sales out tomorrow morning. So we'll visit about that there in the war room. Every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Standard Time. Appreciate everybody's comments here this morning. We look forward to talking to everybody tomorrow. Hope you have a great day.
Thanks,
Dan.